Hey traders, you're welcome back to the Forex Geek channel. In this video, we are just going to be diving into a fundamental skill every trader needs to master, and that is how to identify swing highs and lows in the market. Okay. Now, whether you are into Forex, stocks, or crypto, understanding these key points is crucial for analyzing market structure, setting stops, and planning your trades. Stick around because by the end of this video, you'll be able to spot swing highs and lows with confidence. And don't forget to hit that like button, subscribe, and turn on notifications so you never miss out on valuable trading insights. Okay, now let's just quickly jump in. Let's start with the basics. What exactly are swing highs and lows? Now, as for a swing high, this is the peak formed when the market reaches a temporary top before reversing low. All right. It is marked by a high point with lower highs on both sides. So you can see that we have a swing high here. All right. Think of it as a mountain peak in your price chart. All right. Then as for swing lows are, just the opposite, right? It's a valley in your price chart. It's formed when the market hits a temporary bottom before reversing higher. It's surrounded by higher lows on both sides. Now, understanding this point is essential for reading price action and market structure. They help us identify trends, reversals, and potential entry or exit points. Okay? Now, a quick tip, swing highs and lows are not fixed. They evolve as new price action unfolds. Okay, keeping your charts updated. Okay, so you ought to keep your charts updated, okay, to stay in tune with the market rhythm. So why do swing highs and lows matter so much? Here's the deal, right? These points are the building blocks of trends. In an uptrend, an uptrend is characterized by a series of higher swing highs. Can you see that? An uptrend is characterized by a series of higher swing highs and higher swing lows. All right, that's what characterizes an uptrend. Okay, this indicates that buyers are in control, pushing prices higher over time. Then in a downtrend consists of lower swing highs and lower swing lows. Okay, it shows that sellers are dominating and prices are declining. Now, as for a sideways market, which we call a ranging market, a sideways or ranging market, occurs when you see roughly equal swing highs. It might not be perfectly equal, but roughly equal swing highs and lows. It shows that the market is in a consolidation phase or a ranging phase. Okay, so knowing how to identify these points helps you align your trades with the market's momentum. Now, you can comment below if you've ever missed a trade because you didn't recognize the trend shifts. All right, let us share and learn together. Now, let's just get practical quickly. Okay, how can you spot these points on your charts? The first step is to use candlestick patterns. Okay, look for a swing high when a candlestick has a higher high than the previous and following candles. All right, and for example, you can actually start with the candlesticks. You can see how these candlesticks are making higher highs and higher lows. Can you see that? The candlesticks themselves. You can see that. So you can start by looking at the candlesticks first. Then for a swing low, you can do the same, lower highs and lower lows with the candlesticks. All right. Then you can also use technical indicators. For example, if you have the zigzag indicator on your, in your library, in your MetaTrader library, you can actually use a zigzag indicator. For example, now this is how a zigzag indicator looks like. I'm just going to add it so that we can see how it looks like now. This is a zigzag indicator. You can see it automatically identifies swing highs and swing lows for you. So you can actually use zigzag indicator to highlight swing points. All right, to highlight swing points. Okay, let me see if I can increase the thickness. Okay, so you can see that the zigzag indicator helps us identify swing points. It helps us identify swing points, but remember, it is best to use them as a guide and not as a rule. All right. Then the final step is to connect the dots. Once you identify swing highs and lows, connect them with trend lines. It's as easy as that, right? It's as easy as that. Just connect them with trend lines. This gives you a clear visual of the market's direction and potential support or resistance levels. Now, a pro tip, always zoom out to see the bigger picture. Okay? What looks like a swing high on a 15-minute chart might just be a pullback on the hourly chart. So that's also the importance of multi-time frame analysis, right? We've talked about that in a previous video, so you might want to check it out. All right, so now that you can identify swing highs and lows, how do you use them in your trading strategy? First is trend identification. You can use swing highs and lows to determine if you should be buying, selling, or sitting on the sidelines. Buying if it's in an uptrend, selling if it's in a downtrend, sitting on the sidelines if it's in a sideways market. And then for your stop loss placement, okay, you can place your stops below recent swing lows in an uptrend and above swing highs in a downtrend. Okay, this protects your trade from unexpected reversals. And for your target setting, measure the distance between swing highs and lows to set realistic profit targets based on market conditions. Now, an advanced tip: combine swing highs and lows with Fibonacci retracement levels. You can combine swing highs and lows with Fibonacci retracement levels, okay, to identify high probability reversal zones. Before we wrap up, let's just go over some common mistakes traders make when identifying swing highs and lows. The first is forcing points. Do not force a swing point where there is not one. Wait for clear highs and lows to form, okay? Secondly, do not ignore the bigger picture. Always consider higher time frames to confirm your analysis. And finally, do not overtrade. Just because you see a swing high or low does not mean you should immediately enter a trade, okay? Combine it with other analysis tools for confirmation. And there you have it. Now you know how to identify swing highs and lows and use them to better understand market structure and improve your trading decisions. If you found this video helpful, don't forget to hit that like button. Make sure to subscribe and turn on notifications so you never miss a trading tip. Let me know in the comments, do you use swing highs and lows in your strategy? Keep learning, keep trading, and I'll see you in the next video.